All right. Good evening, peoples. Bruce with Targeted Wealth Creation. I am back at you here. So I wanted to go over some things that I've been putting together for you guys. So I'm going to be mixing several things. First off, my theme is, continuing. What's the market going to do? Well, we're hitting the all-time high. We're still within this 7% expansion. And we could get up to 6,000. I see even 6,150 is just an extreme high. Don't know if we'll go any higher than we are, but this is all within the 7%, and then we should go down. All I'm saying is I think we go down anywhere from 15 to 45% over the next 13 months. It could all happen in a month or two, and then go back. But as I mentioned to you guys, this is another overriding theme. I only see, say, take the S&P 500, or I have better stats on the Dow, but they translate pretty much the same to the S&P 500. So from 40,000 Dow, I only see from cycle studies and from people I follow. I know somebody wrote a comment. We don't even know what tomorrow is going to bring. You're talking about where we're going to be in 8 years. Well, sometimes it's easier to look at the future and see what cycle trends are. Where are we in our economic life as a nation? Where are we within our debt cycle? Where do Fibonacci and other mathematical things project we will be? And some of it's logic, some of it's common sense, and a lot of it's math. So I sort of see a 65 target on the Dow, give or take 5 or 10%. So what is that implying? Well, that's implying something like a 6% annual increase in, say, the S&P 500 over the next 8 years. Well, if you have that, that's not going to be made up of 6% a year or 6.5% a year. It's going to be made up of minus 10, plus 19, right? It's going to have all kinds of numbers to get you. But what I'm trying to educate you is that we're very likely, and evidence is already here, of going into a stagflation environment. What's the closest mimic of last time we were in a stagflation environment? That is high inflation. I know right at the moment we're not. We're going to get rate cuts and all that, but I think you're going to see that long-term rates already aren't going down. So these cuts are probably not going to have the longer-term desired effect. And that's why I see the markets going down, or, sometime within the next 13 months, whether it ends up being October or not. It just means that, these 15 to 45% gets applied to a 58 target on the S&P 500 or a 6,000 target, or an extreme upside would be 6180 or something, 85. But if we get that, then that implies that we probably think of where it goes, how far down it goes if you just get a 30% retracement. That's almost 2,000. That's down to 4,000 from 6,000, 33%. So anyway, what I'm trying to educate you on, when you go back to the 70s and stagflation and some of these things, where is the best use of your money? Well, I'm here to tell you that it's commodity-oriented stocks. Even if you believe in, I started my channel around dividends and income-oriented investment, and I've sort of gone back to growth, although I still like to educate and talk about income. But I don't think ever should anyone be. I was momentarily, I was never 100% in, because I always had 20% of my wealth in precious metals stocks as well as precious metals. And then I probably had 60% of my money at one point in time in yield max and in high income funds. Now that's like less than 1%. And I'm reallocating more to growth stocks, but I will you can translate what I'm saying into some income funds. So let me give you what I'm going to give you. There's two Toms that I like. Tom Nash is a guy that has a great channel, almost 400,000 subscribers, ex-Deloitte senior manager. I did a lot of work with Deloitte in my days in high tech. Worked with that firm very closely, Accenture, Deloitte, even IBM Global Services, the old PwC. So I have a lot of that. And usually the senior managers, the guys that burn out the most, work the hardest to make the partners wealthy. And I have a lot of good friends I've known. So Tom Nash is an ex-Deloitte guy. He's of Russian descent, an American, really, really bright guy. Check out his channel. He has 400,000 almost subscribers. He puts out some really good stuff. So I watched one of his recent episodes, picked up some data points I'm going to share with you. And then Tom Lee is one of the market analysts who's pretty brilliant. He's still optimistic for the markets, but pushed to shove on CNBC recently. He said, look, I said at 4,700 a year ago that we were going to 58. Okay, we're at 58, but I know you'd love to tell me we're going to 68, but I can't tell you that at the moment. I don't have a feel for it. There's too much up and down, which is what I've been saying. I think beyond October, it could happen in October. I still think the week of the 21st right now is the most dangerous. So if we don't go down by and during the week of the 21st, then I don't think October is our downturn. We may finish going to 61. It may go into November or December, and then we probably fall further over the next 11 months after that within our 13-month cycle of the announcement of the first rate cut. So anyway, here's some good stuff that I think everybody can learn from, whether you're an income. Remember, if you guys are chasing yield, you want to know where is this index going. So even if we're going to say we're going to pull back 20% over the next average over the next 11 months, well, you can still, if you're a 5-year, 10-year, 15-year guy and you're buying Round Hill and you're buying QDTE and XDTE and RD, you can keep buying and cost averaging. I'm not going to tell you just because we're going down 15, 20, 25%, that you shouldn't be in those, because that's foolish. They're still going to produce 6% over the next 8 years in average. But what I'm trying to teach you, and I'll go there after I finish this thing on Tom Lee, that you're going to make more money in other sectors, and I'll help you figure out income. It's just that I'll give you my favorite stock. I've been calling for months. If anybody listened to my stuff, I've been telling you the number one stock that I thought was going to grow the fastest and the largest was Palantir. Just go back and listen to almost any of my videos. Okay, I knew that. But do I think you should be in PLTY? Probably not. It's only been, in play for 2 days, but I don't like what they're doing already, right? Now, will you lose a bunch of money in it? Probably not, but will you come anywhere near what the underlying stock will do? No, you won't, right? So why be in that, right? All right, so let me get to you what Tom Nash came up with and then what Tom Lee had said. So Tom Lee, everybody does clickbait. I don't do it as much. I try and be real in my stuff, but even I use a tool to, and I write these long, flowery, trying to draw people in to watch my videos, descriptions and that kind of stuff. You can't help but do some of that. But I never alter what my true beliefs are. And I get a lot of criticism at times, and I'm okay. I'm a big boy. I'm okay with that. Just don't use foul words or call me stupid. Just say, Bruce, I completely disagree. I think we're doing this. And I'll love you for that. I've said in a couple of my videos, I like to, where I think we're going and what I think you should be doing is probably 20% of people would agree with me, 80% don't. That's exactly what I want, because the 80% rule here are typically people that are absolutely wrong. It's like NVIDIA to the moon. Yeah, even Tom Lee. So Tom Lee did a clickbait and said, hey, these 6 funds, buy them. You don't need to work. You'll be a millionaire. Well, I think over time NVIDIA will do well, but at $134, I think it's got a better chance of going to 45 than 200. Now, if it goes to 45, it's a heck of a buy. But here's the ranking. Here's his 6 stocks that Tom Lee said, buy these. And now remember, he also is a market analyst and, investment, whatever you call it. And he has to promote certain things. Now, he gets to pick which stocks and which companies, so he's not going to lie about those, but he's got to make sure he covers a broad spectrum. So he is using of saying buy NVIDIA, buy Meta, buy Tesla, buy Lilly, buy Uber, and buy Palantir. Well, I agree with him on 2 of these. These are 2 of my favorites, Tesla and Palantir. Now, why don't I love NVIDIA as much as I love Palantir? Go back and watch my videos, people. Here's what I've always said. NVIDIA is hardware. And if people, Bruce, they got CUDA, they got software. Guys, their software is minuscule, right? It just accentuates and makes better and is drivers and all that stuff around their chipsets and their GPUs, right? But they don't go out and sell AIP software. They're not known as a software company. They're really a hardware company with some software. I've been there, done that. I work for them, right? Business development in them, sales in them, engineer in them. I understand hardware and software. That's one thing, and tech and computers. Don't know everything. Who can? From crypto, to cyber, to communications, to graphics. You name it. There are just so many facets. But I've worked in a bunch of different tech companies. So Lilly. And here's these 6 companies. So what Tom Nash did, and I love it, right? He was a big proponent of NVIDIA for a number of years. He's still saying, hey, I own some NVIDIA, but it's way lower. And part of his rationale, and this is pretty smart, we all know it got to be the largest company when it was probably close to it again now. I haven't tried to do it. It had a $3 trillion market cap when it was around 140, 146, whatever the last high was, right? And then it would drop and Microsoft would go up, or Amazon, I forget all. Microsoft and I think Microsoft and Google and NVIDIA were up there, but Microsoft and NVIDIA were 2 of them. Apple, Microsoft, Apple, and NVIDIA were changing places in the $3 trillion and being the top market cap company. Okay, so Bruce, where are you going with this? Well, so Tom says this, and then Tom Nash loved what he did here. He said, well, which ones are good and which ones aren't? So he came up with a little system. Whether he came up with it or learned it from somebody else, I'm telling you about it now. And I would use it. It's logical. It's how my brain thinks. So it's easy for me to comprehend. But then I can give you some out-of-character stocks and investments that are going to do well that would score a 0 on this scale because they're not large enough to fit in. But the same thing can be said, guys. Everybody fell in love with Yield-Max. Then we got a lot of love for weeklies and Roundhill, and everybody's jumping around. And we've seen Yield-Max have to come out with spreads and other things to fix the NAV erosion. And I don't think it's going to work, frankly. I love spreads. I put them on all the time, but I don't like the way they're implementing spread. And frankly, when you're forced into prioritizing income, you don't set yourself up for the best return. So let me get to these formulas, guys. So how do you get these scores? One of the highest scores of all, 90, 95 by Meta. But here's the problem. When you got a $3 trillion stock, okay, how high do you think it's going to go? Let's say in 3 years, it goes to a $6 trillion. So you doubled your money, right? 33%. That's not bad. But guys, that's nothing on what some of these stocks can do. How about Palantir at $800 million? It could be 900. Guys, I don't check it every day. I just remember the number, right? I'll put this at 3 trillion, right? So Palantir could, and this might, sorry guys, this might only be 100 million now. Well, let me Google it while I'm at it, because it just dawned on me. Market cap of Palantir. Yeah, I think it's 80 going on 100. Yeah, here we go. I caught myself on this. I call it 100 million because right now, today, it says 97.44 billion. Okay. So 1,000 billion is 1 trillion. So it could go, let's put it in perspective. Let's just do it this way. 97.5 billion. Okay. So that could go 30x, people. If it was 100 billion, it can go 30x to get to 3 trillion. So I've always said this, being a guy from the industry. Hardware margins are much harder to maintain than software margins, right? Because software, once I recoup the cost of my development, I don't have any real, I have ongoing maintenance and some of that, but I don't have any real cost. But on hardware, I'm always, I have to buy chipsets, right? I have to buy them from TSM, with these Yeomax symbols starts to mess me up, TSM, right? So I was almost going to, you have to buy them from TSMY. Well, no, it's like, luckily today I'm saying NVIDIA and not NVIDI, right? That's what'll happen when you cover something so immense for a while. So my point is here, regardless of what the system says, this is an 85 and this is a 90. Well, why is this 85? Well, I put my notes in here because it's got a 67 PE and institutional ownership of 42%. So Tom Nash, brilliantly, again, whether it's his or he got it from somebody else, it doesn't matter. He scores 10 categories from 0 to 10. So revenue has to be growing over the last 3 years. If it's not growing over the last 3 years, you get 0 in that category, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you got 10 categories. You get a 0, you get a 5, or you get a 10. That's why they're all, numbers ending in 5s or 0. You can't get a 4, you can't get a 1, you can't get a 9. So they're all stats, and I made notes of them, right? So a net margin, you look at 10% here at minimum. So where did NVIDIA fall down? Well, if your PE gets too high, okay, what is too high? Well, if it's 30 or above, at 30 you get 5, okay? But if you go down to 10, between 10 and 30, you get 5. If you go above 30, you get 0. If you go below 10, you get 10, right? So you want a company that's valued. Its price to earnings is way down. Well, when you get a real popular stock that's flown, so that's the only thing here. Oh, and then the other thing is you want institutional ownership, right? More than 50%. Somebody had to pick this number, whether Tom Nash did it or he got it from, some market guru. So Palantir is at 42%. But guys, they were at like 25% a few years ago. So the institutions are coming in. They just happen to have a retail love of the company. I know a lot about Palantir. And that's why I've been talking it up forever. Now, guys, look at the chart, though. They've gone up. If you look at Palantir, do I recommend you run out and buy it today? It was $43 yesterday. Do you know what it was on August 5th when it pulled back? It went down to $20. I grabbed a little bit on that day. I think I was around 22 or something. But I already owned some of it. But Palantir was almost like Tesla. It was $40 5 years ago, whatever the chart shows, right? I mean, it got all hyped and did its IPO and all of that. That's what I try to teach you guys also. These things are all over the map. So if you look, 43.52 is where it ended. Let me do a 10-year chart. I don't know how long it's probably only been around 5 or 6 years. Yeah, it goes back to 2020. So it looks like it came out in October of 2020, and it was around $10. It proceeded to go up and hit a high of $45. It then bottomed in the $6-7 range here over multiple months, anywhere from March of 22, right? Here, this is a chart I'm looking at, people, if you care. Just to show you. So it's done this big giant cup and a handle. So it very likely could consolidate for 1 month to 6 months over here and go back down to, 35 to 40 range. Could go as low as 30, which would be a great buy. And then probably the cup and handle would project a double. So from, say, $6 to $45 is 39. You're probably looking at, an 84 in 3 years. 2 years could be in a year. So that's the kind of stuff that we can see here, because it just is, I could go on and on and on. But so you have various things. Look, same thing with Meta. Meta got a 95. Their PE of 28. They only lost 5 points, right? Because they weren't below 10. That's the highest score. But guys, I don't have any interest. Now, if you want an income fund, Meta's pretty steady. If you don't want to lose any NAV and you just want to go buy the stock, that's not very good. But, I think it's still positive within the YieldMax family. It's not your huge yielder, but it's also not going to kill you. But you're not going to get generational wealth by investing in Meta. You might have if you bought it 25 years ago, right? Tesla, I think, has huge upside. But guys, we've all seen Tesla go to 400 back to 100. Now it's in the 250, 260 range, right? I think it's got, with that robots and, not even so much the robo-taxi as much as the humanoid robot in the family home in 3 to 5 years. I mean, that kind of wealth, that kind of growth could be trillions and trillions of market cap alone. So I just think Elon Musk is a genius. Is it going to have fits and starts and all kinds of crazy stuff? You better believe it, right? So my net result is, what 2 companies do I like the best here? I like Tesla and Palantir. NVIDIA will have its day. I mean, Tom Nash says, hey, go out and buy it when it drops 20% below where it's at, which is somewhere around 115, whatever. You have to do the math on its 134, because I did it using a 140, assuming I think it could go to 140, but it all depends on where we top in the S&P and everything, and the smart money is getting ready to get out. So anyway, that's what I got for you here, people. Buy when things are on sale. I go out all the time and try and sell puts. Just fast forward now you can. But this is fascinating. This is an example of Palantir's ecosphere and how they can get in and dominate an industry. So they're betting big on air travel. You say air travel, what the heck? Maybe Bruce, you're saying we may go into a recession. We may be in one. Air travel may be cut, blah, blah, blah. Well, this shows you their ontology, shows you what they're good at doing. So I did a lot of research. I saw a YouTube channel on this. I did some of my own research. There's a small company. I'm not even actually recommending you go out and buy it, although it could be very volatile. And I'd say if you bought it, get in, get out, make some money. Watch it over time. I think over time it could become huge, but it's very volatile right now. So Palantir did a recent investment of $1.2 million. Okay. Well, Bruce, they're $1 billion company, and you say they could get to $3 trillion or more in market cap. Why do I care about a $1.2 million investment? Well, it's strategic, right? And actually, they bumped up their total investment, whoopee-doo, to $2.7 million. What is Surf Air Mobility? Well, it's a Los Angeles company at the forefront of electric and hybrid motors applied to regional aircraft. So the idea of, if you know anything at all, and I'm in and out of Asia a lot. I spend a lot of time over here in Asia since I'm retired. And one thing that you see, the massive growth, is in regional flights. Not that you don't have it in the U.S. I remember all those little regional carriers, and at one point I was in the Long Beach area, then I was in Orange County and San Juan Capistrano and Marbella. So I've lived all over Southern California, but I spent over 50 years there. So that regional growth is just going nuts in Asia. You have all these cheap airlines. China's probably got a tremendous amount. I've flown on some of the small puddle jumpers, and I do it over in Asia at times, and then take the big carriers when I go back from continent to continent. But they're at the forefront of aircraft that want to create air routes, right? Electric air routes. Well, it's much easier, just like with an electric car. You don't come out and create electric trucks that need to drive thousands of miles in a week because the recharge infrastructure may not be there. But when you're talking about aircraft that's flying regional, you can make motors and engines that do these shorter flights. But it isn't just about the transport. What about all the operational things? So if you look up Surf Air Mobility, their parent company, Surf Air, is sponsored a couple of airlines. Mokele, I think it's Southern something, just Google it. So their revenue's up 392% in the last year. But guys, that's nothing. The market cap's $23 million. Now here's the bad of any startup. They carry a lot of debt. They're not profitable. So you go out and look at Tom Nash and Tom Lee. They want you to be in, and I agree with it, the safety. And I'm not recommending Surf Air. I'm telling you why Palantir is going to kick butt and why they're doing so well. So this may look super small, but it may be a huge, it's just one example, okay? So the stock in Surf Air, I'm jumping around, SRFM, okay, down 80% from last year. It's up 6%. Well, that up 6%, it just was up 40% yesterday. I had this video planned to do yesterday. Darn, now I didn't buy it. Honestly, guys, it's too much risk. But I did the analysis. I said there's a 150-day moving average, and at the time I was putting this together, it needs to reach $3. Well, guys, the stock is at 327, and it was so yesterday, the low was 248, but it gapped up a little bit, and it ran to 359 and closed at 327. So it's kind of covered that hurdle, but it's still massively down. So I'm not recommending it. I'm just showing you that this is an emerging market, okay? So how's Palantir going to play it? Well, they did the small investment. So what do they want out of it? They want AI-powered flight operation of electric-powered aircraft for regional travel, which would be massive, is massive. Palantir Surf have been working together since 2021. Okay? So this isn't just happened. So what is Palantir? They're turning complex data into actionable information. What do? They do it for the U.S. government. They do it for Army, Navy, military. They do it for hospitals. Big amounts of complex data. They can put it all together with their ontology and get out simple, actionable things that can save tons of money. So what does an airline infrastructure look like? A regional airline and a group of regional airlines. Well, they got to optimize flight routes, right? Hubs, all that. Maintenance schedules, right? All these operating things have to be maintained. What about just managing resources, people, time, equipment? Sometimes you got to make split decisions. Which is the right one? Do you cancel the flight? Do you change the flight? So they're developing a Surf OS, an AI-powered software to make operations more efficient. So, well, you say this is a small company and they're not profitable, so Palantir is putting a little bit of money in. What are they getting out of it? Well, they're getting to work with Surf Air, so they're basically almost giving them their software. They could never in a million years afford this huge amount of money that countries and governments and huge corporations are paying, okay, to Palantir for their ontology setup. And Palantir is saying, well, you're in an early stages, let us help you. But you know what? Since we're investing in you, we bought some of your stock, we're letting you work with this software, we're developing it with some of your expertise, we want equity. So they're gaining equity in this company. So if this company ends up being the big player and they're using all of Palantir, it's a win-win-win, right? So it's just one small example, and it certainly isn't going to show up on the revenue books anytime soon. But if you're not forward-thinking, if you don't have a CEO that looks out there, so I just think if I had the best stock to go the fastest and the furthest is probably Palantir. Now, that doesn't fit my model of commodities, right? So I'm trying to reach outside of it and give you an example. I know you guys will kill me if I stop here and don't do what I promise. So those of you, I know this is going to be long on the tooth, but I've got to go through and do this for you guys. I'll make it as fast as I can because I promised, okay? I'm already late on one. It's already up 10% since the day I bought it. All right, let me just recap real quick because I want this to be right now about silver and mostly silver miners, although there are no pure play silver miners. They all mine more gold than silver, but only some of them mine a sufficient amount of silver, okay? Just so you can study that, Google it, learn about it. Nobody produces 100% silver and doesn't produce gold. Some just sell off their gold to other miners, right? But they're probably pulling out more gold than they are silver. It's just the way it is in the ground, okay? So look at our cup and handle, right? So in 1980, we went to, can you imagine what that price of $50 from 1980 and inflation adjusted? I think it's like 180. And then in 2011, we went back to 50. And then we pulled way back, and we're down here at this $30 range. Well, I've got just in 3 to 4 years, us being $180 projection. So what are some of the stocks that I like? And this one's been beaten down. Guys, take a look at any stock. 2020, beginning of 2021 were highs on GDX and most of the gold and silver precious metal stocks, and even on GDX. Now, some have gone and surpassed those highs. Most haven't. Some are horribly still down at their lows, right? So what I'm trying to give you is some of these are speculative. Some of them are quality companies. First off, First Majestic is a quality company with mines around the world. They're not without issues. They had a big, massive lawsuit in Mexico for years with one of their bigger mines that they bought from another company years ago. But I will say this, Keith Neumeyer, just Google him. He's all over. There's tons of, YouTubers that talk about Keith Neumeyer. He's known in the industry, big proponent of silver, and they're a big silver miner. So what I'm trying to tell you guys is you're skating to where the puck is going versus where the puck has been. So if you're chasing every AI, YY, and everybody else, when Palantir is going to be the clear winner there, get on board with some silver miners that are already mining silver. There'll be some explorers and developers that do 100x, but you're going to have some that go to nothing, right? They may even double or triple short term and then go to nothing because they don't really have much. And then you got other ones. So what I'm getting at here, just at $30 silver, if we stay here for a while, then there's going to be millions of new cash flow for AG. So when these miners start reporting in the next week, I think MAG, one of my favorite miners, doesn't report till the 7th or 11th of November. I think it's November 7th. I don't have it in front of me, guys. But all of these companies are at good buy places, right? I own them. If I'm talking about them here today, I'll tell you if I don't own them. But I own most of these and I'm buying more, okay? This is something to buy in whole for 4 or 5 years. Now, I'm not telling you if we run up and double that you don't want to take some off the table. You can, and then buy some more when it drops back inevitably, right? Because that's what things do. They're, NVIDIA's the same way, right? When it went to 146, it's been back to 95. Again, I think there's a period that it could go well below 100 again. It could even get to 45. But it doesn't mean it might not be 200 in 2 years. All right. So here's one of my favorite silver miners, more silver than gold. I bought on Tuesday at 14.5. More luck, and I really wish I would have gotten this out. I had the order in for a couple of days. I saw that it looked like it might go to 14.50, but I wasn't sure. I just said, well, I already own a bunch at lower prices, and I like this pattern, so I want to try and get it right at this line. And you know what? I got lucky. Since I was in Asia, I couldn't stay up all night. I woke up in the morning, and my 14.50 buy order went off on Tuesday of this week, and I looked, and it got down to 14.46. So I just barely snagged a few hundred more shares, But I love Max Silver. And you look at this chart, this is a famous bull wedge, right? Down here, it could have gone down further. A lot of times they'll come back and retest the breakout. Or as Gareth Soloway, one of the guys I also watch and like, talks about return to the scene of the crime. Another really bright guy who does basic teaching of knowledge of charting. Really, really good. Learned a lot from him over the years. Okay, here's a stock I bid in for multiple years. I mean, a lot of my purchase was over here. So I've been under, when it went down here, I said, oh, this thing going right back up. I've suffered sideways for multiple years. But right now, and the reason I show this, some of the charts I find are in Canadian. ABRA is the Canadian symbol. This is ABRA silver, okay? And the U.S., you buy these on the OTC. So you can't do options with them. So on these kind of stocks, I put a few thousand. I put less than 0.5% of something. I may go out and put a couple thousand. I think I've got 3,000 in ABRA because overall I'm up now, right? And I think this thing has a possibility to go to $6.28 over the next, year. You have to understand the power of multiplication. With silver at $30, do you know what? When silver goes to $50, these miners triple their margin, their margins, their earnings. So, I mean, it's just phenomenal. You see what a tripling of earnings does for a company like NVIDIA. But I honestly think over the next 5 or 6 years that your precious metals in the S&P 500 are going to have higher earnings than most of your NASDAQ companies. That's how you have a shift. It won't last forever, people. This will be a 4 to 6 year run, and then it's over, and they'll all come back down because the boom and bust cycle is if you get $180 silver, you've just incentivized every company in the world to dig for silver. And what will happen is over the course of it being 100, 120, 180, they'll all find more silver and we'll be in an oversupply. We've been in a huge deficit for 3 years. We haven't been in a deficit for 3 years for 40 years in silver. So it's supply and demand. We use it in solar. We use it in medicine. We use it in munitions with these war cycles. We're using it up. We use it in mobile phones. We're using it in computers. One of the best conductors, along with copper, for electricity. But it has all the medicinal and all the weapons things that copper doesn't have. So let me give you, I got about 3 or 4 more mucks. I've always admired mucks. But guys, if you owned it here, you've been killed. You need to own it back here, right, prior to COVID. Look at this. At COVID, it went down to 20 cents, and then it went to $12. So those are the kinds of things that happen with these miners. So it's not cheap relative to all of that, but my gosh, look how cheap this was. So if you own it down here, the best thing you could do is just write it out. And the same kind of thing, it probably will go to $20, but it's probably going to take, 3,000, 3,300 gold and 40 or 50 silver for that to happen. But you got one of the best CEOs in the industry. This guy's had more billion-dollar finds and built more companies. McEwen, just a brilliant, brilliant guy. But this is very typical. What is that? A massive bull flag. Looks like a wedge, right? It broke out. What did it do? It came back to test the scene of the crime. Up, down, right? Is this a 1? Is this an A, B? Maybe we'll get another pullback if we get our October. And then you buy here for a 3-wave up. I mean, it's hard to tell. But these are recommendations for you to look at for multi-year opportunities where who wants to be in a growth stock if it's not going to 4 or 6x, right? I don't. That isn't going to happen in Meta. Meta's not going to go up 4 times in the next year or 2. I mean, it might go up 30%. So Santa Cruz Silver, I've owned this for years, right? I've been watching this flag. I bought some initially back here, okay, and I bought in this general area each time. I haven't bought right at the low point. It didn't make it to the line on this, right at a false breakdown. But it's also close enough to the scene of the crime that, we're probably talking $2. I mean, think of a $2 stock from a 35-cent stock. And guys, by the way, look up. I have all this, and this comes from Gaddy has a different pronunciation from some of his trading site. But Santa Cruz Silver, I've been in it for multiple years. Small player, developer, right? These things are risky. This isn't your mother's S&P 500 stock. But also, where else are you going to get 6-8 times your money? Because it's shown that when it runs up in this flag, we just, eventually we're going to go to 50. We have to go 35, 39. Again, could we have a $3 or $4 pullback at any time now? Yeah. But I think 26 is probably as low as possible for silver. And 50 is probably within 6 months. And at 50 silver, this thing is probably 3x, 4x where it's at now. So 2 other bigger players, I've given you enough of the speculative. AU. I forget their full name. They're a big GDX, Anglo Gold, right? South Africa and all around the world now on New York Stock Exchange. $26.76. It's pulled back. It hit 32. It's at 26.76. I like where the chart is. The analysts have re-rated this. This will have massive earnings. Both have been upgraded. I mean, these are gold and silver players. Harmony, one of the best charts at 10.02. Another South African miner with multiple jurisdiction mines now. Love, love, love Harmony. That's a $40 stock in a couple of years. AU is probably a $50 stock. So you've got more upside in Harmony. What are the other players that I like and own? Newmont, Anikio. Just look at the top 10 holdings of GDX. Those guys are just primed. But if this bull cycle plays out and GDX goes from 40 to 160 in the next 4 to 6 years, it's a 4x, okay? these stocks, these will probably do 6x, and a mag will probably do 10x, and some of these explorers and juniors will do 20 to 50x. But you could buy a handful of the explorers and have 5 of them go out of business and have another 3 that go up 50%. So it's a speculative gain. I'm going to tell you right now, don't run out and buy every little explorer. The ones I've given you generally are the quality explorers, developers, producers. Most of these are producers, people. So they're already earning and making money. All right, that's what I got for you. Sorry about the length of this. It's really long. Okay, this is Bruce, Targeted Wealth Creation, signing out. This is not investment advice. I'm not a financial advisor. Have a great evening. Bye for now.